Hey everybody, welcome to another episode of the Real Estate IQ Show. Today I have a very special guest, my friend Kenny Tenser, Vice President of Express Mortgage. Kenny, thank you for joining us today.
Thank you for having me.
Today we're going to talk a little bit about the state of the mortgage market and the environment of lower rates and the opportunities that it presents to some of our consumers and investors. Tell me a little bit about what has happened to mortgage rates in the first 6 months of 2019 and what you see in the foreseeable future.
Well, Ricardo, basically the first quarter of the year we were seeing a little bit of a higher interest rate environment. And what's been happening in the last, I would say maybe 3 to 4 weeks, there's a lot of talk in Washington about cutting rates. And essentially at this point in time, we're looking forward to a lower rate environment.
Does that present very specific opportunities, for example, for first-time home buyers, people that may be renting now that have been trying to figure out when they could actually jump in to become homeowners?
Absolutely. In fact, for first-time home buyers, they're going to find that chances are when they start looking for rental apartments and comparing the rents versus to what it costs to purchase, they're going to find that probably purchasing may actually be a little cheaper than renting.
Right, which is not that common. You would think that as a homeowner it should cost you a little more, but if you can actually have a home that's yours where your principal and interest payments are lower than your rent, it's a kind of slam dunk.
It is, and that compounded with the down payment because for first-time home buyers we can do 3.5% down.
Okay.
So by the time you factor in your first month, last month in security deposit, you may not need too much more to get into that new house.
Is there any correlation in your experience, you have a lot of experience, between these lower interest rates and what happens to home values? Would home values go up? Or have they been more or less stable?
Usually in a lower interest rate environment, it tends property values tend to go up because people have more buying power with the lower rates. They're able to afford more, and essentially property values could increase.
Well, it's also a great opportunity for some of these renters because with these lower rates, the cash flow impact on their family budget is finally accessible.
Absolutely, and they realize the American dream, which is home ownership.
Now, what about if I already own a home and I'm asking myself, can I lower my monthly payments with a refinance? What exactly is a refinance? How does it work? And what do I need to do to prepare myself if I'm thinking about a refinance?
Well, I guess the first thing we need to evaluate, Ricardo, is essentially what is the current interest rate you have now and how much is your monthly payment? And then we compare it to the interest rates in the current market. We factor that into an amortization schedule and we figure out how much it's going to cost you to refinance. If it pays, meaning there's a payment savings and an interest rate savings, it would probably pay, especially over the long term.
Right. What about, if I bought my house, let's say 3-5 years ago, I'm hoping that the value of my house also went up. Does that help in the equation?
Absolutely, because the more equity you have in the property, the easier it is to do and the less expensive the rate would be.
Fantastic. Now, what about for our investor audience, our viewers and our listeners to our podcast? We have a lot of investors and they have different goals. Some investors want to buy and rent, right? So it's a cash flow property. Other investors want to buy and remodel the property to then sell it again, the proverbial flips. What are some of investment products that you can offer, some financing products for investors that you can offer in this environment?
Well, we have a super product. In fact, it's something that's new in the streets these days. It is a product where it's actually a NINA, which is a no income, no asset verification. It makes it very easy for investors to get in and out. There's very little paperwork that they have to provide. We don't have to do a full pre-approval process for them. And it's something that we find that is very easy to get in and out, and the time frame is much shorter than a typical closing. So we can close that transaction in 2 weeks. As an investor, you want to be able to present to the seller the fastest possible, easiest way to be able to grab that house.
Right. The more aggressive you are in your time frame to close, maybe the more leverage you may have in negotiating the price down.
Said because it better than me.
It's all in the price that you can buy, right?
Exactly.
That's where the business is. Now, for an investor, is there a typical amount of down payment that they should be ready to put up?
Yes. As foreign investors, what they should consider is for a single family home, they would need about 30% 40% down. And for a condo, they would probably need about 35% down.
We'll get to the condos in a second because I'm very interested about that. But before we get off the investor topic, talk to me a little bit about foreign investors. A large part of our audience are foreign investors in South America, in Europe, in Asia. Is there a difference between a foreign loan, foreign investor, and a domestic investor?
Absolutely. The domestic investor has a different sort of audience in terms of lenders. And for foreign nationals, they work with different banks and different programs. So you're going to find that there are differences. In fact, I would suggest that for domestic people, it might be slightly harder or slightly longer.
Okay.
And for foreign nationals, it's a little bit easier to qualify.
What are some of the key documents that foreigners need that, in your experience, they don't usually have ready because maybe in their countries that documentation is not required?
Well, the good news is they don't require tax returns, so that's easy. But they do require a letter from their employer or their CPA or their accountant. They may not have that ready on hand, but it's something that they can usually request. And they will also need a bank reference letter. So the bank in their country of origin, they will have to get a reference letter from them as well.
Well, you know, and to our investors, we always recommend a network of accountants and real estate attorneys that can advise them throughout these transactions, because the United States accounting and laws usually are quite different than in their home country.
Absolutely, and I would suggest that.
Right. So now let's go back a little bit to the condo market, because for people who live in the United States, there's been a lot of talk that the current administration in Washington is going to try to create more flexible lending terms for condos. Here in South Florida, we have a very big condo market. What is going on in today's environment with financing to buy condos?
Well, it is easier to buy condos today than it was 5 years ago in terms of condo financing. Today we classify it very simply in a full condo review and a limited condo review. A full condo review means that the bank is going to want to identify the financial credentials of the condominium, just like they are with a mortgage applicant. If the condo meets the requirements, they'll be able to go in with 5 and 10 and 15% down. If the condo doesn't meet the requirements, the same bank will do the financing, but then they'll require 25% down.
So basically it's an issue of how much risk the bank is comfortable taking, not only on the client's creditworthiness, but on the condo's creditworthiness.
Absolutely.
Well, one sticking point that comes up over and over again is this issue of the condo questionnaire, and it frustrates buyers and sellers. What is the condo questionnaire, and people looking to buy these condos, what should they know about this condo questionnaire?
Well, the condo questionnaire is a form that they get from their lender, and essentially they take it into the condo association and they get the condo association to fill it out. One of the things that should be considered is there's usually a fee to pay to the association to fill that form out. The condo questionnaire itself is a document that identifies all the different statistics that exist in that particular condominium. And so once the form is filled out, we can determine if that's going to end up as a full or a limited condo review.
And I bring it up because the frustration of many of our buyers and sellers as they go out into these markets is because without the condo questionnaire, it really delays the process. So if you're trying to be aggressive on your offer and closing quickly without having your ducks in a row, you can get delayed.
You can. However, if you do put down the 25%, you can waive the requirement for the condo questionnaire altogether.
And do the limited review.
That's correct.
Fantastic. So let's wrap this up. Why is it an advantage for a client to come to a mortgage broker like yourself instead of going direct to a lender?
Well, Ricardo, that's a great question. I would consider the option of, if you went into, let's say, the bank, one of the banks on the street, one of the big boys on the street, they have one product to offer you, one rate to offer you. We have an array of different products, probably to fit every individual's needs. We can offer them a search for different lenders to provide them the very best interest rate. And so I think those two key ingredients would end up giving them a better loan.
Kenny, this was very insightful. I invite all of you to send us your questions, and if you want to connect with Kenny, let us know. it's a very interesting time to be buying and investing in the South Florida real estate market. So we look forward to continuing to bring you these deep insights into the Florida real estate market. Kenny, thanks again for joining us.
My pleasure, Ricardo. Thanks for having me.
Thanks again to all our viewers and to our listeners of our podcast. Please, wherever you listen to your podcast, find the Real Estate IQ Show and download it so you can listen to it in your car or whenever you have a chance. And until next time, we'll see you soon.